Today is October 3rd, and the observations that I've made seems to be blossoming. It seems to be developing into a viable means of developing into a what do they call it? Alexander Elder, the Russian, the medical doctor who immigrated to the U.S. apparently on a ship and just dumped ship, and then just defected to the United States, and then apparently he became a actually he was, I believe he was a psychiatrist, and he became a he wrote a book called Trading for a Living, and one of the words that he used was losing, and that was probably one of the most one of the most important thing to do. You have to know how to lose. Aside from that, segue into the Titanic, and it reminds me of it. Reminds see, I'm trying to understand. I'm attempting to understand when people say the market is efficient all the time, and I'm trying to understand why that is the case. Why is the market trending all the time? How is that possible? And what does it occur? As a day trader, I'm looking at certain news that inflows into Wall Street on particular groups of sectors and overall market, and also the influences of the stock itself. So when the news hits, when it hits pre-market, I notice that there's a small volume, or even a massive volume that would impact the price of the stock. And if the news is negative, it'll start to dip. And then as it gets closer to the open, the stock prices actually start to climb, which means that there are individuals, it seems to me, are taking advantage of short selling at the point where the news hit, and then started to profit before the market opens to clear away from what the true market reaction will be. When the market opens, then there's further profit taking from some other forms, wherever, what they are, and it rises a little bit. And then if the news is significantly impacting their bottom line of that company, the decline will either be double of what it started out to be, or even triple what it started out to be. And if I were to attempt to reversion trade at any point in those places, I'll be stopped out. So what happens is the movements of the market efficiency takes time. It is not a 90-degree instantaneous change in the price where it fluctuates and flatlines to a certain level. The market has a tendency to exhibit the characteristics of initial opening where price discovery occurs, and entrants and participants takes that information and processes it, and then develops into the movement where the trend is established to get to the point where at the end of the day, or even at a certain point, it is above or below where the price should be, and it may continue to the next day. What reminds me of the movements in the stock being market efficient seems to suggest that the market tends to exhibit the characteristics of a Titanic, where the Titanic is a ship that moves in a particular direction, and it collides at a certain news event. The news event collides with the Titanic, and Titanic moves in a certain situation, and it doesn't fall all the way. It breaks up in half and then starts to go down. So when the news is exhibited in a massively negative news, it'll start halfway, breaks up in half like the ship, and then further declines and drops to the bottom, where it stagnates for a certain amount of period, where the market efficiency has taken foothold. But in the meantime, where the news was released, to either 3 or 4 days, or even maybe 5 or 6 days where the news had occurred, the efficiency is taking a foothold of the news upon the stock, and it is adjusting. And of course, the market is efficient, all right, but the efficiency has a varying speed at which it resides in a new level of price level.